Welcome everyone to this episode of Perpetual Perspectives powered by Vest Exchange. This is Stoic, and today I have the pleasure of having with me Hus, aka Hustlin _ on Twitter. He's a TradFi quant fund founder, an ex TradFi market maker, and ex investment banker, as well as a microstructure nerd. I took that off his Twitter bio, by the way. And I'd be remiss if I didn't include the fact that he plays golf with the former President Trump and hangs out with Ray Dalio and Kanye West in his free time. I've been really looking forward to having this conversation for a while, man. So without much delay, let's get right into it. Could you please introduce yourself?
Absolutely. I mean, first of all, thank you for having me. It is an absolute pleasure. I'll get into it. So very briefly, I am a quant trader. In terms of my background, I studied astrophysics and behavioral economics, and then I have a master's in data science, and I would say that probably defines a lot of my work today. So I mainly trade equities and bonds with my hedge fund. I also manage a family office in Saudi Arabia that does privates, real estate, and some public equities in the local market. And then finally, I also manage my crypto portfolio that I've been trading since 2013. And I tried to do all the above from a sort of quantitative lens. I've been doing it for almost 10 years now. And as you guys may have noticed from my Twitter, I would say my favorite market is still crypto to this day due to its, PvP nature.
Yeah, thanks for sharing that. You wear so many different hats, and what I'm interested in knowing is how did you even get into trading or financial markets? What piqued your interest, and what made you put that first step into this door? And what was your first exposure in terms of trading and crypto in general? Do you have like an interesting story behind that?
Yeah, I used to play this little game, World of Warcraft, and my intro to trading was the auction house. So I would sell items, mounts, all over the place. I'd literally come back from school. I'd sit in front of the screen for hours, literally just on the fucking auction house while everyone else was doing raids or arena or whatever. And the game actually blew up so much in Saudi Arabia to the point where kids in school were like buying items from me, and they were doing it in real life. But of course, since we were kids, we didn't really have access to cash. We were too young to sign up for PayPal, so the only solution at the time was to go to like the bookstore, the library, and sort of transact with gift cards, right? Which wasn't really that practical. And so I did a bunch of research, and that's when I stumbled upon Bitcoin, and around 2013. And so I started doing a lot of these transactions over Bitcoin. A lot of people would just send me that, and I'd hold it, and then I would have a bunch of people in China that would work and help me with grinding accounts, selling gold, and so on. We would always transact in Bitcoin. So I'd like accumulate all of this, and I didn't really touch it until I would say 2017, which was around the time when I was actually in TradFi. So at that point, I was an exotics market maker for one of the large banks in the U.S. I used to work in New York. Mostly index options. I would structure products around those. And that was around the time when derivatives sort of launched in the crypto space, with BitMEX and the other exchanges here and there. So I decided to get into it. I was like, this is a market that is very dear to me. These are products that I'm familiar with. So let's give it a shot. And naturally, as everyone in derivatives trading in crypto, I blew up a bunch of fucking accounts, right? That was the beginning of the end for me. I started out as sort of a technical trader. I would look at shit like patterns, EMAs, whatever.
Mhm.
Didn't work, right? And then I ventured more into fundamental investing, right? That was like the alt market craze, the ICOs. Also
Right.
didn't really work out for me, right? I realized that like investing wasn't really for me. I was more short term in how I thought, right? So I went back the trading route. And that was also around the time when I met a couple guys in college. They were the ones who were my partners today in the hedge fund. And we were all trading at the time, right? One of them traded equities, the other also did crypto. And we were sort of racking our brains all the time, like how do you actually get successful in this market, right? Your typical fundamental techniques don't work. Your technicals obviously don't work, right? We noticed that this market was very PvP like, and so at that point, I started getting more and more quantitative, right? That's around the time when I started looking at indicators such as open interests, such as microstructure, funding, right? Whether it was like looking at footprints, the 1 minute chart, looking at how algorithms sort of trade under the hood. And I would just spend a shit ton of time just literally watching the tape, the order book, the DOM, right? I would spend 20 hours a day, 7 days a week, just relentless. Like it was my mission to understand this market and how it sort of moves, right? Um, and we would notice these patterns that would happen at certain times of the day, certain days of the week, certain holidays, certain weekends. And of course, at that time, we couldn't really explain, a lot of them. We would just look at it from more of a correlation perspective rather than a causation one, right? We would notice, for example, after the daily open, certain behavior would occur. We would take advantage of that. So a lot of our positions initially were like very scalpy, right? And then once I started to understand the market and its nature a bit more, that's when I started to understand the sort of relationship between price and narrative, and that's when I started taking swing trades. And that's where I made a lot of my money as well, because crypto is sort of a market with a, a lack of fundamentals. I would say, right? You're literally just trading virtual garbage all the time. You should be aware of that, but that also means that price is very reflective and often leads narrative, right? So if you can understand that relationship pretty well, you can have an advantage in this market. Um, so I guess, long story short, it took a lot of pain to get to where I did in crypto. My approach is very quantitative in nature, right? I'm a data scientist. And this market to this day is very PvP like. My focus is mostly on positioning and flows, right? That is what I focus on almost every day, whether it's in crypto, whether it's with the hedge fund in Chicago, and so on.
Yeah, I really appreciate you sharing all of that. That was super detailed. And the one thing I've noticed is like, bro, I played the wrong game. Like, I played Age of Empires. I should have fucking like played Warcraft, Warcraft, because it's like a common theme I've seen. In
Yeah.
some of the traders that I've spoken to. One question I wanted to ask you, like, you were stacking Bitcoin at 2013. What was that insight in terms of like holding on to it until 2017? Did you have like any? Did you look into it and you were like, okay, this is probably like a valuable story, like something that you want to hold on to for a while?
Yeah, no,
Like, what
I
gave
mean,
you that
believe it
insight?
or not, I actually believed in the tech.
Interesting.
And
Interesting. Okay.
my sort of approach was using Bitcoin as like a means of transacting, right? That's
Right.
why I was very bullish on it. I thought that people, especially in Saudi Arabia, would start utilizing this technology because like the way people use cash here is very different from other parts of the world. Even like credit cards, I think only about 4% of all transactions in the country utilize credit cards. Like people are huge on debit here, right? So for there to be like an alternative sort of method of transaction, that kind of made me bullish, right? Especially one that was anonymous, one that was fast, right? Like when you had to worry about bank transfers back in the day, those took a long fucking time, right? So I don't know. I always was very bullish on Bitcoin as sort of a means of transacting, and I think when people
Right.
started noticing that in like 2017, 18, it was reflected in the price. And then when I started getting more and more into TradFi, I think that reputation kind of changed. I started trading it more and more as a risk asset, as a higher
Yeah. Right.
beta,
Mhm.
S&P and so forth. So, um, I think the nature of the market has changed a lot, and it'll probably continue to evolve.
Yeah, and like along the same lines, you kind of mentioned your journey. What does that process look like for you overall in terms of like learning and also the shift in, your mindset and all of that? Like, how did you go about learning? Because I mean, you went through a specific, kind of process, but a lot of people just come into this cold, self-taught. Like I'm self-taught, right? I had to like
Yeah,
really get kicked around quite a bit and learn quite a few
yeah.
things on my own. So what did that look like for you, that process of learning, and how did your mindset shift, along
Yeah,
along
yeah.
your along that process?
No, I mean, similar to you, I was self-taught as well. A lot of people usually ask me like for book recommendations, stuff like that. I never really gained knowledge from those sources, and I
Right.
never really had a mentor in the market. For me, I think the best teacher was just pain, right, and screen time. Um, the best lessons I've learned in trading, whether psychological or even strategies that I've developed later on, have come from losses, right? And that's why I would always recommend to traders, if you really want to become good at this, be comfortable with losing, right? We all have to pay our tuition one way or another. Pain is the best teacher. It's the only way that a lesson sort of sticks, right? Only through experiencing that agony, losing everything, will you truly appreciate like how short lived the nature of profits in trading are. For me personally, in the beginning, I never really had that much trouble making money. It was more so keeping it,
Keeping it,
right?
yeah. Yeah.
Yeah, and that took me a while, right? When you asked about how my mentality changed, in the beginning, I would only think about how I can make it big, right? I was always in a rush.
Mhm.
I was only focused on the profits. When I would think of a trade, I would only think about how much I would make from it.
Yeah.
Nowadays, it's like I think of how much I would actually lose if shit goes wrong,
Yeah.
right? To
Yeah.
me, that is more important. Because at the end of the day, right, trading isn't perfect. Even the very best traders are only slightly above 50% in terms of their win rates, right? It's about maximizing probability and sort of minimizing your losses, and that was probably the main change in my mentality, right? Only then will you be able to assign risk properly, and it is risk management, in my opinion, that leads to consistency, which is probably the biggest issue you see with new traders.
Yeah, 100%. And I've done like 14 of these episodes and I've talked to a bunch of different people and this is the common theme. Like everyone talks about, hey,
Yeah,
they think about what can go wrong versus what's going right. Right. And like
yeah,
this is a common theme that I've seen throughout. Um, and so along the same lines, I'm a student of the game, right? So I learn from other people. I like looking at how they view certain things, what their perspectives are. And
mhm,
there's an account on Twitter. It's called, for anyone that's listening. I believe his account name is Illustrate Alpha, and he did a series of text interviews.
yeah,
I think it's called Alpha Male Interviews. And then so you did one back in 2022. So obviously I looked through that a while ago. I read through that interview, and there's a couple of things that I want to touch on and see if you want to elaborate on them. And there's one quote
mhm,
that I like from there is you said trading is like trying to solve a puzzle and getting
yeah,
comfortable taking risks based on an incomplete set of facts. And it's really interesting. Like kind of I listened to in on those in the spaces you did recently as well. You have a very like interesting background. Like you talk about astrophysics, philosophy, psychology. Um, and I'm similar in that sense in terms of like always trying to solve complex problems and trying to solve puzzles. Um, where did that mentality come in for you? Do you think it was just natural or something that evolved over time?
I would say probably from astrophysics, right? A lot of what you do in astrophysics is just like sift through random data sets of noise, right? And you
Right,
learn
right.
how to sort of find value within that. And markets are no different, right? The great thing about public markets for me, and one of the reasons I could never really love private markets as much, is the fact that, first of all, everyone has access to the same information. And second of all, that information is very imperfect, right? So there's always like a constant game of chess. It's you versus the aggregate. You know what I mean? But that can also be a dangerous mentality for beginners, right? You start to get into this whole idea of the market is wrong and all that. That's not what I'm talking about, right? I'm talking about the concept of edge, right? I'm talking about the concept of taking advantage of small inefficiencies in a very level play field where theoretically everyone has access to the same information. That's the other reason why I mostly trade majors, right? When you look at like small coins, low liquidity garbage, there's a lot of insider information there. It trades just like private markets. So you don't really get the opportunity to separate yourself from the others through your own analysis, which is what attracted me to this market in the first place. Um, and with regards to it being a puzzle, right? Public markets are always sort of dynamic and changing. So it's like there's never a boring day. If you ever feel like you've gotten to a point where you can like understand it, or where you have the market solved, then you are in deep shit, right? Because that just means like you're not learning anymore. And I don't think that that is possible. There's so many cogs moving in this machine, and it is constantly changing. And there will never be a point at which you can actually master it, right? That's what I love about it. It's literally a never-ending puzzle. Like think of the different types of participants. Think of the ever-changing economic cycles. Think of liquidity. Think of the new products that are coming in every day, right? Think of new types of algorithms. Wherever the market thinks it has found efficiency, it creates other pockets of inefficiencies elsewhere, right? So never, never, never ever feel like you've fucking solved this market or that you've figured it out. And I would say that crypto, contrary to TradFi, perhaps experiences change faster. It is a younger market. There's a lot more that can change with it, right? And there's a lot more uncertainty surrounding it. There's less liquidity, which is what probably gives it that sort of PvP nature. It's easier to aggregate the flow in this market, right? It is easier to isolate it and say, okay, this came from that sort of participant. This was like dealer hedging, or this was a target fund rebalancing. Whereas with TradFi, I would say it is significantly more efficient. So you have to sort of look elsewhere for edge. And you probably would have to look at TradFi as more of an aggregate or single player as opposed to like isolating it to several different ones and analyzing their psychology, behavior, and so on and so forth.
Yeah, I really love that, man, because my background is I'm by education I'm a mechanical engineer, so physics is huge for me.
Mm,
And I found like some things are intuitive to me, like in terms of viewing the market. And like sometimes people ask me questions, it's hard to explain certain things to them, because I
mhm,
just relate certain subjects from physics to the market, right? So like yeah, I love how you describe like trading is like trying to solve a puzzle and getting comfortable taking the risk based on an incomplete set of data.
yeah,
Um, and something you touched upon in that interview as well, and just earlier during this conversation, was pain being the best teacher. The quote that was in the interview was, "They say experience is the best teacher, but I disagree. Pain is the best teacher," and I
yeah,
wholeheartedly agree with that. We don't have to get too philosophical here and talk about other things besides trading, but yeah, I agree with that wholeheartedly. And what I wanted to get your thoughts on was in terms of your like progression as a trader, right? A lot of people have this issue in terms of how long do they stick to a certain strategy, or they want to try everything. You know, what indicators do I try? What do I do? Um, and they kind of go down this rabbit hole of having all this noise. I mean, this is more
yeah,
discretionary, right? But you kind of went through that process.
yeah,
So relating it to like pain being the best teacher, some people have that issue where they can't learn the lesson that they're supposed to learn, and they keep getting that pain in the same way, so they don't
yeah,
progress, right? People who blow up their accounts and they still come back, make the same mistake, blow up their account again, and eventually they're just not left with the chips to go through that
yeah.
process again. What is your thought process on that? Like in terms of like how can someone use pain? And I mean, this is like a fork. There's two questions here. How can someone use pain to their advantage? And also the second question is, in terms of your own progression, how did you figure out, hey, this is the most optimal way for me to go in terms of how I want to trade?
Yeah. So pain is only useful insofar as you learn from it, right? At the end of the day, we are still very emotional creatures, right? Especially when you have to think about money, right? When money's on the line, we tend to act differently psychologically. And, you can look at a lot of different concepts, including loss aversion, that always inform the way we trade, and unfortunately, also make it more likely for us to commit the same mistakes over and over and over, right? So, some advice I could give is that find a way to solidify that pain, whether it's like journaling, writing things down, right? And just reflecting. Reflecting is very, very important, I would say, as a trader, not just to hone your psychology, but also your strategy. So, I'll give you an example. Um, there was a time where I would lose a ton of money on Saturdays because I would have positions open, and there was a certain window, usually between 11 a.m. to 1 p.m. ET, where there would be some interesting trades in a very low liquidity environment that would create some drawdowns for some of my algorithms, right? And so, I could have kept the same trade on and on and on every weekend, or I could have just journaled the fact that this happened, noticed that there was a pattern, sort of ask myself, okay, why did I take this trade? When did I take this trade? How did I manage the execution? Right. And I personally also like to write things down on paper. I think that helps solidify it in your brain, right? When it takes more effort to 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 write something down, the recollection process becomes easier. Um, and so the best advice I would give is always be curious, always reflect. Otherwise, that pain is just going to be something that you repeat in an emotional state where you are not as rational or objective, right? It's very important as a trader to be objective. And one thing you'll notice is that over time you will become more and more emotionally stunted, right? You're going to become desensitized to large drawdowns, to large gains, and that can be both an advantage and a disadvantage. I would say it's an advantage because it makes it easier for you to swing on big opportunities and have confidence, but it's a disadvantage because sometimes risk management can become more difficult. Um, and you know, that's why you'll notice like a lot of OGs sometimes will have wild drawdowns. It's because they don't fucking feel these losses. And at the same time, a lot of them might even have issues like taking profits at certain points. You know, if someone's made a million, like a 500,000 profit is not going to impress them. They're always going to have bigger and bigger targets. You have to find a way to balance between being objective and, you know, how can I put this one into words? Realistic, I guess. Not really realistic. Let me hold up. Let me can we pause this 1 sec? Let me think of
No,
a
it's
good
okay,
word.
bro. Yeah, yeah.
Yeah.
We don't have to pause it. Yeah, it's okay. Cut it
Well, I'm
out.
trying to find the right word to describe this, right? But you, you want to find sort of the perfect balance between being objective and emotional in a weird way,
Right,
right? You don't want to be fully objective. You don't want to be fully emotional.
right.
You want to be in that fine line in the middle, right? Your advantage as a human being compared to an algorithm is that you are emotional too, right? Like you
Mhm.
can understand others' emotions. You can understand the fact that shit, taking profit has never made anyone go broke or whatever, right? You might not play out the entire move, but guess what? We are an arranging market, and sometimes that's the best approach, right? Um, so sometimes emotions can actually be an advantage in a way.
Yeah, agreed, agreed. Um, and something else I wanted to ask you was in terms of conviction rate. Are you a poker player, by the way?
I did. I played a lot of poker at a
Okay, there you go.
very
I can recognize
GTO
that. Yeah,
style.
yeah.
Yeah.
Because what I've seen is people who play poker and understand the game know when to size up, and know when
Yeah.
to have conviction in terms of bets. Um, can you offer some like shed some light on that in terms of like knowing when to size up or knowing when to have conviction? How does one go about developing that? Is that just through, like you said, pain, or you just go like what should the process be for that?
I think it just takes a lot of time to
Right,
develop that, right?
right.
It obviously depends on your edge, your strategy, and all of that, right? If you've been running a strategy for, like, let's say a year, you will recognize the spots where it is usually most profitable, right? Whether it's how open interest looks, how the positioning looks, whether it's certain flows that happen in certain months, right? Again, it just depends on your strategy, but that's why I don't recommend traders in the beginning just like swing big on everything because
Mhm.
at that point you don't really know what is a home run until you've actually seen it, right? So a lot
Exactly.
of people usually will get disappointed. They're like, "Oh, I wish I sized bigger on that trade." No, who gives a fuck, right? Your point in the beginning is not to just make it big off of one trade. It's to recognize when those spots occur depending on your strategy, right?
Right.
And after you sort of become more aware of that, after you sort of master that aspect, then you can take big swings, right? It's just like a game of baseball. You don't fucking swing big every time and strike out, right? You want to know when
Absolutely.
to when to hold, you want to know when to not go in, you want to know when to just swing a little for a little single here and there, right? At the end of the day, again, it's a game of probabilities, and I recommend to a lot of traders to actually play poker, right? You
Mhm.
don't treat a pair like a flush, right? You have to recognize when those occur, and it's also important to recognize what the other people's sort of hands are, or what the market's hand is. And the market gives you a lot of hints that usually show its hand, so take advantage of that, recognize that as well.
Yeah, and would you agree if I said that in the beginning it should be more so about like preservation of capital, like paying you're going to be paying tuition for a while, right? And it also
Yeah,
depends on your psychology and mindset and how long. I mean, some people could take a long time. And you mentioned this point too. It's a marathon. It's not a fucking
yeah,
sprint. Like I've
yeah,
talked to so many people that looked at it as a sprint. Got
yeah,
everything blown out. Like they're not here anymore. You know what I mean?
yeah.
Um, so yeah, like, would you agree with that? Like, it's more so preservation of capital in order to get to the point where you can take those big swings.
Absolutely. Like the way I would describe it is in the beginning, it's preservation of capital. In the middle, it's maximization of returns.
Right.
And then as you get more and more experienced, you go back again to preservation of capital. Right. And so yeah, I would say in a funny way, right? Towards the end, you actually go back to how you used to trade in the beginning. But that middle portion, that's where you maximize your returns.
Right.
You don't want to be swinging big in the beginning.
Yeah.
100%. I totally agree with that.
Yeah, because the thing is, like, I mean, there's great stuff on CT if people can filter out the noise, but especially for someone coming in new, like, there's obviously seasoned traders that don't use stop losses, that trade with fucking a lot of conviction.
Yeah.
and it's difficult for them to discern between that and like where they are and what they need to do to get to that level, right?
Yeah.
And
Yeah.
so for anyone listening in, I just want to walk them through that because there's probably traders who have been traded for too long and are listening in on this conversation.
Yeah. No, no, I
Um,
think stop losses are definitely important. There's always like a debate within the quant community
yeah,
because in a weird way, stop losses can be inefficient, right? If you look at
right,
like the distribution
right,
chart, you'll have like a huge chunk of other people who are likely to place their stop losses where you would, right? You can
exactly.
still be dynamic about it. Like you can have
Mm,
stop losses, but also maybe be more creative about where you place them. Maybe you place them before where others have their stop losses,
yeah,
or you decide to take the pain and have it below so that it doesn't wick at the bottom and you get fucked or whatever, right? So you
right.
can work your way around that. But to totally ignore stop losses, I think that's a bit weird. With hedging, I would say a lot of people might be surprised by this statement, but I am not a big fan of hedging.
Yeah,
In general, if
interesting.
you always feel like you have to hedge, then you
Mhm,
probably should not be in that position in the first place, right?
interesting. Mhm,
Um, yeah, I mean, look, hedging should be dynamic. It shouldn't be
mhm,
something that's like, okay, I'm going to enter this and I'm going to hedge it immediately. You know, that just doesn't
right.
make sense. But if you're in a position, something arises that was unexpected or whatever, then yes, I get hedging. But like, you always want to be in a spot where you want to maximize your profits as much as possible. You don't want to be you don't want to be eating your EV.
Yeah, absolutely. I agree with that. Yeah, thanks for expanding on that. Let's pivot to your trading and mindset in general. So you kind of touched upon this a little bit earlier, but what would you say your trading edge is in a few sentences? Obviously not specifics, but what tools do you use and what's your framework?
Yeah, in very nebulous terms, I would say position and flows,
Mhm,
which all come from a solid understanding of microstructure, right? Again, all those countless hours that I spent for years in front of a screen, just watching how algorithms trade under the hood,
mhm,
understanding where they bid, understanding how trend algorithms work, how mean reversion algorithms work, how liquidation algorithms work, how rebalancing algorithms work, right? What happens in the market, like intraday, very small moves, and how does all of that add up into the positioning in the market? How can you take advantage of these certain pockets of liquidity that are created by some of these algorithms, right? Which is only going to get exacerbated more and more as the market, let's say, becomes more systematic and algorithmic, right? A lot of people think that that's more efficient. I think that's more inefficient. You've seen countless examples of fake news that algorithms just trade as reality. They still can't discern truth or not, right? That's an
right.
example. You can take advantage of a lot of these spots. We've had a lot of these with like ETF news back in the day with Bitcoin. You'd have like these fake articles, price would just fucking wick down 10% or whatever. That's an example of an inefficiency that's created by algorithms, right? Um, so I would say my edge comes from just understanding that sort of plumbing, those pipes that underpin the market, right? And
Mhm,
being able to put that together in a big picture. A lot of people usually try to draw their biases and trading decisions from like larger time frames and then go down and down and down. I
mhm.
do it the opposite
You
way,
do another
right? I
direction.
start with
Yeah.
the very, very smallest sort of time frame, and then I go up. And I wouldn't recommend new traders do that. It's a very hard thing to do. Like
Yeah.
you would see like a 1 minute wick, and you're like, oh shit, it's so over. Don't don't do that. But if you understand the types of players, if you understand the execution, if you can understand all of that and put it together, then I think you can have a pretty strong advantage in this market.
Yeah, so that's pretty heavy for like anyone listening. I mean, there's people that are probably going to be newer listening into this. So try to unwrap this a little bit. In terms of flow and positioning, I'm assuming you listen to the tape. You're one of those Agar tape listeners as well, right?
Oh
You listen
yeah,
to
oh yeah.
the, of
I
course,
listen to
right?
that shit in my
Yeah.
sleep, bro. Yeah.
So could
No,
you
literally.
unpack that for like what that be? Yeah, I know. Can you unpack that for like the general audience? Like, what does flow and positioning mean, and what does like studying the tape mean?
I mean, I don't want to go too much into specifics because I can talk about this topic for days
For
and
a
days
long
and
time. But yeah,
days.
let's try to keep it like
Um,
let's keep it, I guess, like one level deep. You don't have to go to like extreme details, but a
so
little lower
let's
than
just
surface level.
yeah, let's start with like the tape very simply, right? One of the first things you want to pay attention to is the speed of the tape. right? You'll have a lot of low volatility versus high volatility times. Recognize when that happens, why that happens, and what actually happens, right? Pay attention to the type of execution. Listen to the sound, right? You can discern between, like, let's say, a swarm order, a chase order,
Mhm. Yeah.
a market order, right? Limit orders being filled. Understand when those happen, why those happen, who these certain types of players are. Try to look at the different types of players and think about why they execute in certain ways. Is this person using market orders because they're getting liquidated, or maybe it's a weird algorithm that just doesn't give a shit about where it gets executed. Why, right? Like, think about all
Right.
these things. Try to put it together in a very big picture sort of view. In terms of positioning, uh, put these pieces of the puzzle together, right? Remember where like buys and sells happen. Um, remember, try to aggregate the types of players, right? For example, if it's like a leveraged fund, they are very short term in nature. They're very reactionary compared to, let's say, retail. Or maybe let's think of like a, a dealer or a market maker. Those positions can also differ, right? So this is probably where it becomes like more art than science. And again,
Right.
it would take me days and days to explain
Yeah.
it, but like, always look at the types of players, look at how they're executing, try to reason through it, right? You'll notice patterns that will help you sort of discern who's doing what and why they're doing what, and memorize that positioning, or at least find a way to systematically model it, right? And then take advantage of it, right? An example of how you can take advantage of it is like psychology, right? If you know that there is a certain price where a lot of people enter, there's a lot of open interest that increased there, you know that they're longs, right? You looked at the footprint, you looked at the execution, you're confident, right? Now, what happens if, like, let's say price goes up for a day and then all of a sudden it goes back way below that entry for those longs? You look at the positioning, those longs still haven't closed. Price goes back to that break even price, right? Human psychology. Let's think of loss aversion. People were very uncomfortable taking a loss, therefore they didn't. But the moment that loss goes back to zero, humans naturally will start closing. And you know that that was a human because you, from the type of execution, you
Right.
realize maybe that wasn't an algorithm or whatever, right? Again, pay attention to like the small details. Um, so you know that that area is going to create supply. You can either short it, you can TP or long, whatever, right? Um, so that's just an example of how you can analyze it, how you can include behavioral psychology,
Absolutely. Yeah.
depending on the type of player. In terms of flows, I like to think of flows as like repetitive patterns in price.
Mhm.
Um, and this is probably the hardest thing to discern, right? Flows lead to positioning. Um, and you want to be able to discern between random noise and sort of repetitive like transactions. That's what flow is, right? If it's something that repeats, something that you can model, it's something that you notice again and again and again, you can take advantage of it, right? And you can have a quantitative method of sort of discerning this. If you're a data scientist, use something like R, use something like
Mhm.
Python, right?
Yeah.
Because you're very prone to schizophrenia if you trade like lower time frames. You might start
Yeah.
to assign causation where it doesn't make sense. And I would say that causation is very important in lower time frames. Correlation isn't enough. And if you're going to insist on trading correlation, then be very tight with your risk, right? Correlation is more into beta territory, causation is more into alpha territory. Alpha obviously has more edge, but also more risk. And that's what people misunderstand, right? Um, so yeah, I would say that's probably how I would think about positioning, flows, the tape. But it's a very large topic that you can talk about for days and
100%.
days. You know,
100%. Yeah. I mean, it's a huge subject, but I just wanted to unwrap it a little bit for people because
yeah.
people ask me these questions and yeah, I figured it'd be helpful for anyone that's listening in. So I appreciate you elaborating on that. The one thing I've noticed is like people like see a lot of like, oh, this guy he just dumped $200 million worth of like we had that well, I think it was on Coinbase, right? Right at the bottom of the range,
Yeah,
like someone dumped
yeah,
like 200
dude,
million
such a
with like
retard.
millions
Yeah,
in slippage, bro. And they're like, oh, this
yeah.
guy like the thing is like people see like money and they correlate it with someone being smart or like knowing
Yeah.
something, and that's usually not that's
No,
not
that's
the
not the
case.
case. Never
Yeah.
never assume that, right? Like, the market as an aggregate is smarter than any one individual. That is a fact, right? But to assume that one individual has more knowledge than the rest of the market, that is usually a mistake, unless you're dealing with like a market that has, or an asset, let's say, that has a lot of asymmetric information, right? Like I would place more emphasis on something like that with like low liquidity coins. But when you're talking about Bitcoin, ETH, S&P, and index, right? Then I don't think any one individual has more information, honestly. Like that's very, very, very rare, right? Most likely it's either a retard or an algorithm just going absolutely haywire, right?
Yeah. Yeah.
So I'd be wary. And the other thing you also have to notice is that a lot of traders have their hands tied, right? Think of a fund perhaps that has a risk manager and is forcing it to cut positions at the lows because it like hit a certain margin
Right.
percentage or whatever, right? Or think of a fund that has like a mandate to hold minimum cash, right? And they're forced to like offload certain points so that they can rotate or whatever. So don't always assume that it's knowledge that defines why they trade. A lot of the times it's just rules, it's guidelines that you as a retail trader don't have, and that gives you an advantage a lot of the time, right? You are not forced to hedge at the lows. You are
Right.
not forced to offload positions in weird places. You're not forced to take profits early so that your quarterly earnings can look great or whatever, right? You're not forced to minimize your transaction churning to reduce your tax bill, right? There's a lot of examples that I can give you where if you have access to cash, you have no mandate, blah blah blah, right? You have advantage as a retail. People always talk shit about retail in this market, but I promise you, if you know what you're doing, you are at a huge advantage.
Agreed 100%. And there's this conversation, like I read something a while back. I don't know who tweeted this, but it was something like, I'm too discretionary for my quant friends, but I'm too mechanical for my
Too
discretionary
real.
friends. Who was it? Do you remember who it was?
I have no idea, but
Okay.
I relate to
Yeah,
that
so
very
I've read that
much.
tweet and that like really got me thinking. What do you think about that? Like, so you're quantitative. What's your execution like? I mean, you don't have to really get into details, but like, what's your general thought process when it comes to that statement in terms of discretion and being quantitative? Like,
I'm gonna avoid the execution part because I have more to say
mm,
on just that general topic.
right.
Um, so being fully systematic, being fully algorithmic has its sort of disadvantages, right? Like I said, it creates a lot of inefficiencies in ways, right? There are a lot of times, and even if you look at funds like Rentec, where Jim Simons had to literally override their models and machines, right, during 2008, and other moments, right? You can't always just rely on algorithms. At the end of the day, they are machines that we program. We teach them how to trade certain environments, and those environments are not always the same, right? Environments change, right? And so do models have to change. Um, and so I think it's a flaw to just focus and be fully quantitative. Another maybe side of the coin is if you're like fully a data scientist, you can get into this sort of trap where you always believe that like past performance leads to future sort of trends and patterns, which isn't always the case, right? Um, there is such a thing as bias. There is such a thing as dynamic environments, right? So don't just look at a market from one point of view. And then for the discretionary part, um, at the end of the day, again, we are fully human, and that comes with its disadvantages, right? Whether it's psychology, emotions, inconsistency, um, inability to limit risk, bias, right? You have all these different aspects that make it a disadvantage to just be fully discretionary, right? We're not objective beings, right? So you sort of want to be in the middle, right? Like the way we trade at the fund, we call ourselves sort of discretionary quant. We rely
Hmm.
on
Yeah.
quantitative indicators. We also rely on quantitative execution. However, um, most of the decisions are discretionary, right? And it also helps that we are like more long term in nature, I would say. Like
Right.
you have more time to think.
Yeah.
Whereas if you're like
Yeah.
a high frequency trader, there's just no space for you as discretionary. Pointing and clicking can only get you so far. Um, so yeah, I would say try to be in the middle as much as you can, right?
Mhm. Yeah, absolutely. And that ties into something else that I ask everyone. There's this conversation around being a specialist and understanding nuances on a few assets versus, I've seen people trade a lot of tickers at the same time. What's your thought process on that? Is that just unique? Is that just unique to the person and they how they think and their unique psychology and mindset and framework, or like what's your thought process behind that?
Yeah, I mean, look, I don't think there's a correct opinion
Right.
here. I am of the opinion that you should be a specialist rather than a jack of all trades in trading,
Mhm.
but that's because that's sort of where my edge in strategy comes from. It comes from
Right.
like literal countless hours of looking at like one asset, understanding its ins and outs. Whereas if you put me in front of like a screen with, I don't know, GME and telling me to trade it, I would not do anywhere near as well as I would with like Bitcoin, right?
Right.
Um, and so it really depends on the person. It depends on the strategy. If you are, for example, like a correlation trader, um, if you are a fundamental slash narrative trader, then maybe it makes more sense to focus on breadth rather than depth, right? But for me, like I'm a big proponent of being a specialist. And that can also have its like drawbacks, right? Like what if, let's say you trade one asset, you do it really great, but for example, it's like a really illiquid asset or it's something that is bound to get regulated and completely fucked or whatever, right? So you also have to be
Mhm, yeah.
careful where you spend your time, right? I think it was like Druckenmiller that said, put all your eggs in one basket, but monitor the shit out of that basket. And
Yeah.
that's how I approach trading as well.
Awesome. And talking about your trading, what do you think you struggle with the most, and something that you still might struggle with, and how do you go about remediating it?
Yeah, believe it or not, even though we talked a lot about risk management, that is probably my most difficult point, right? Um, so I always had trouble sizing bets, right? Even though that is sort of my advantage today. Where
Right.
I became good, I kept trying and trying to like reduce the size of my bets, whatever, but I could never be consistent with it. And so I realized, you know what? Let me change the way I'm thinking. Right. So instead of thinking about the sizing of the bets, I think about the frequency of the bets. I realized that, yeah, you know what? I'm always going to be fucking betting big. So let me instead reduce the frequency. Right.
Interesting. Yeah.
Um, yeah. So my approach was then more focusing on recognizing those spots where I should bet big. If I'm going to bet big anyway, then I better be doing it right. Um, I would also say, like, in general, I have trouble taking, like, profits early. That's why I
Mhm.
always tell people just take profits, take profits,
Yeah, I
take
know. I
profits,
noticed.
because
Yeah.
I myself had a lot of trouble with that, right? But at the
Yeah.
same
Yeah.
time, knowing when to recognize the environment that you're in is very important, right? I became better and better at recognizing when we are in, like, a ranging environment, a low
Yes.
volatility environment versus a trending one. What makes a market trend? Right? Whether it's certain narratives, whether it's certain positioning. For example, if you've been consolidating for a while, the market has been waiting for a certain macroeconomic indicator or a certain narrative as an excuse to deploy cash, right? Then perhaps you are more likely to see a trend, right? So you become better at recognizing these spots, right? So, one of the issues that I had again was taking profits, and then I realized, okay, you know what? That also depends on the environment that I'm in. And when I got better at that, I also got better at taking profits. But yeah, I would say those are probably my two biggest weaknesses.
Got it. I guess you basically answered. So I was going to ask you about risk management, also what you believe your strengths are. You basically answered
Yeah,
those. Like you basically look for points where you can bet big, and you take the shots.
yeah, yeah.
Um, so in that same interview, the alpha male interview that I was referring to earlier, there's like a recurring theme of what you view as a good characteristics to have in the market, and included things like flexibility, passion, curiosity, and being a natural problem solver. Now that we're a few years removed from that, is there anything else that you'd like to add to that list, or would you like to elaborate on that?
Yeah, I think maybe I would add three more. Uh, The first is resilience or
Mhm.
persistence, right? A lot of traders, they come in with a mentality that they're going to get rich quick,
Yeah.
that if their strategy doesn't work, they immediately give up. No, take the time, be comfortable again taking losses, and be comfortable with the fact that strategies take time to develop, and also be comfortable that it takes time for your knowledge in the market to improve, right? So be resilient, be persistent. The second thing I would say is patience. Um, know know that patience is very important, waiting for the right opportunities, right? Also, when you're in a certain position and you have confidence that, like, I mean, the most recent example was this ETH trade, right? There was a lot of
Right.
times where, like, I bought at like 2,800, twenty
Hmm.
nine hundred. Price would just go back to, like, let's say 3050 or whatever. I could easily just close the position there and given up, given like the weeks and weeks that we would have
Yeah.
of ranging, right? But being able to sort of channel that patience, right? Have confidence in your idea. It really, really helps. And also just being patient. And when you enter a position, like sometimes you'll see like a huge wick, like 10 to 20% or whatever, and you immediately just long that shit. I would say that that maybe used to be a better strategy back in the day.
Mhm.
Whereas now, because this market is like so dominated by both liquidation algos and trend algos, that has become sort of an inefficient strategy. So first thing is the moment you have like a big wick like that, there's a lot of algorithms that just automatically buy the liquidations. And
Right.
then there's a lot of trend algos that would start trading against that, right? They notice that, okay, there's a big move. So you know what? If it hits like certain VWAPs or EMAs, we're gonna
Mhm.
sell. And then guess what? Price goes below where those liquidation algos sold, or they go to where those liquidation algos bought, or they go to like the entry, and you just get stuck. You get range bound, right? It's not something that you used to see back in the day, but nowadays you see a lot more often. And so
Mhm.
patience is a virtue, right? Don't rush
Yeah.
into getting into positions. Know your sort of take profit points, know when your thesis is invalidated. That all takes time, right? And be smart with how you deploy your cash. You always want to have cash on hand. Don't be like 100% in the market, right? And
Right.
that's the other sort of part of patience. Maybe the third thing I would add is delusion, right? The greatest sort of inventors, innovators, and even
Mhm. Yeah.
traders are
Yeah.
ones that are fucking delusional, right?
Right.
Not people that think in like 1% moves, but people that think bigger, right? Of course, like that can also be a detriment. So
Yeah.
know how to utilize delusion, right? Know how to utilize like grand ideas, creativity, and don't be afraid to challenge the market every now and then, right? But don't always do it, but just know when perhaps the market is offsides, and know that you don't have to listen to your favorite fucking influencer or friend or whatever, right? Be confident in your ideas.
Yeah, thanks for sharing that. I figured I'd bring that up and see if you wanted to add to that, and I love the other aspects that you added onto that list. All right, Huss. So, the one question I wanted to ask you before we pivot a little bit, and we're coming up on kind of the last section of this conversation, is I know we were talking about there's not a lot of books that are great in terms of trading, but one of the few books that I read that was pretty interesting was called Best Loser Wins by Tom Hugert, and it basically talks about how important it is to be able to accept losses and not have your ego tied to the market. So, um, in terms of the losses that you've taken, I mean, you talked about how you kind of get numb to them over time. How did you deal with them initially, and what was that feedback loop for you like? And if there's any advice that you'd like to give people that are listening in.
Yeah, no, I mean, naturally, it fucking hurt. It hurt a lot in the beginning, right? It hurts your ego. It humbles you, right? I'm not gonna lie and tell you, yeah, it was always easy. It's just not the case, right?
Right.
But you sort of have to realize that, you know what, you know, it doesn't matter now. That money is gone. Stop obsessing. There's no point in crying over spilled milk, right? You can choose to dwell your entire life over a bunch of losses and do nothing, or you can move forward and improve, right? Focus on improving your consistency instead of preying on your luck. Because at the end of the day, you'll have many more opportunities like this, right? The market sometimes gives you the illusion that, this was a one and done. It'll never happen again. That's just not true. If you've been in this market for a long time, there's a reason you're still here. And it's because there's constantly opportunities, right? They're never going to end. So, shit happens, life goes on. That's also why I try to say don't get wiped. I think, by far the most important trading advice I can give someone who's just starting is, try to minimize your losses, right? Like, while intuitively it makes sense, the exceptional important only really sticks with you. The exceptional importance only really sticks with you once you like fully understand the idea and power of geometric growth. Returns are multiplicative. If only one payoff is zero, your end result is literally zero. Like, also think about if you lose 50%, you're going to need a 2x to get back there, right? It gets harder and harder. So you don't want to put yourself in that position. But you know what? If you do, it fucking happens. Whatever. It's not the end of the world, right? Go get a job, earn some money, and run it back when you have a clearer mind, right? It won't make sense to you right now, but that lesson that you just learned will make you many, many multiples more than what you just lost, right? Compare yourself today to yourself from last year. You've come a long way, right? And that's how trading works as well. So think about the 10 years after, right? What about those lessons that you just acquired? You're going to make a lot more than you just lost. So always remember that as long as you're learning, improving, and trying again once you're an inventor. Fuck. Can you just this part? You read this part. As long as you're learning, improving, and trying again once you're in a better mental state, right? You don't make the
Yeah.
same mistake. You'll eventually make it, right? There's no rush.
Yeah,
And also,
absolutely.
the other thing I want to talk about is that sort of round tripping, right? You often get a lot of DMs from people that are like, "Yeah, I just had this four-figure position. It went to six figures, and it went all the way back down because I didn't take profits." And it's just like, why not do it again, right? It's okay. I know it fucking hurts, but you need to balance that hopium that led you to hold six figures in the first place with a little greed that would have allowed you to pay yourself, right? It's not an easy balance to strike. It takes time to develop, and it doesn't have to be one trade either, right? But um, yeah, you'll get better at it. So don't cry over spilled milk. The best way to manage and reduce risk is to have an edge, right? The larger your edge, the more comfortable you can take risks, in my opinion, right?
Yeah, completely agree. And I'm a huge proponent of this in general, like in life. Like I have an opportunistic and an abundance mindset where you view like obstacles as opportunities versus
Yeah.
being hard on yourself. All right. So to wrap up like this section of the conversation, you in that interview that you did in 2022, you talk about like you talk about making it right, and then you said at the time, hey, like in a conventional sense, you know how people view making it, you've made it. But then you talk about
Yeah.
like making it as being analogous to your curiosity being satisfied. So, but if you take a step back, I mean, curiosity should never be satisfied, right? I mean, it doesn't
Yeah.
really, you never really satisfy your curiosity. But now, a few years removed from that, how do you feel that like the past couple of years have changed the way you view the markets, trading, and making it in quotation marks, if at all? And are there
No,
any other lessons that you've learned over this period of time?
yeah, I think a grim and dark truth for people is that you will actually never make it mentally, right? You can set a target for yourself. Some people are like, oh, I hit a million or I hit 10 million and I'll
Right.
just stop. I'll make it, right? And if you are like that, maybe you are, then I don't know. I would not consider you a great trader, in my opinion, right? Because what makes you hungry, what makes you curious, right, is that sort of never ending um, thirsts, right, for success. And every time you hit a target, you're going to come up with a new one, right? If it's monetary, guess what? After you hit 10 million, your next target is gonna be 50, and then one after that is gonna be 100. For me, I was never really driven by money, right? I was
Hmm.
fortunate enough, to not have to obsess about that. And for me, it was more about solving the puzzle, right? And the thing with markets and crypto as well is that you'll never be able to solve that shit, right? It's a never ending puzzle. I've mentioned this before. Again, you're always dealing with incomplete and ever changing information, right? It's a literal impossible puzzle, right? So that's why I don't think I'll ever reach a point in which I will make it. And to some people, that's scary. For me, that's exciting, right? I don't ever want to wake up from bed and be like, damn, I have nothing to do. I have nothing to look forward to. I already have achieved it, right? It's a pretty depressing thought. Um, and if you do ever, I guess, reach that point, then maybe just like look in other areas, look at other industries, look at other careers, right? It doesn't have to just be trading for you, but that is also your brain or your body perhaps telling you something, right? If you lose that hunger and your thirst, that's probably your most powerful weapon and tool. So, know how to utilize it, know how to understand that intuition.
Awesome. Thanks for sharing that. And then let's pivot really quickly. I know you kind of went through this in the spaces as well, but in terms of like the trade that you took, the E trade that you took, what was your general thought process for taking that trade? If you could quickly walk through that.
Yeah. So again, it's very similar to how I approach most directional trades, although it's not my bread and butter. It's usually a combination of like narrative and positioning, right? So we had a pretty parabolic run in like February for ETH, if you recall, right after the Bitcoin ETF approval. People started rotating in like January, February to ETH, right? So you had a pretty long rally because everyone was like, okay, the next logical step is an ETH ETF approval. And then guess what happened after that? A bunch of articles started coming out, a bunch of news, rumors, and the odds of an ETH ETF approval started drastically decreasing. So people would then adjust their positioning, right? first it started with people selling their spot. And when I say people, I'm usually talking about funds, right? Um, and then you had people using shorts and puts in the last, like, let's say 3 to 4 weeks. Like once we started breaking, I guess, key levels in ETH, key psychological levels, which is like below 3,500, people started going ham on the hedges, I think, and you could see that reflected in the positioning, right? Um, but then you got to a certain point where that reflexivity started to kick in, and people just didn't actually care about the narrative as much as they cared about price. So we went below like 3,000, and price started getting absorbed there because what happened was like the book became very illiquid, very thin, and you'd have shorts covering, you'd have spot buying, just because the price looks good, right? It was a psychological sort of barrier. And so every time we would go there, the book would be empty because of liquidations or whatever. People would bid it, and it would just go up. You also had like a bunch of mean reversion algorithms bidding at that point. There was a lot of different factors pushing price up. So it became a pretty good area for absorption, and it gave you like an asymmetric bet because where some funds, let's say, were forced to unwind and de-risk below 3,000, you had the luxury of deploying cash, right? And so regardless of what outcome would happen, you know that positioning is skewed to, let's say, shorts. You know that a lot of spot has been offloaded, right? So you know that even if the ETF were to get rejected, you're not going to get a drastic down move, right? Most of it has already happened. And so I envision that even if you got a rejection, price would just shoot up, right?
Right.
Sort
Right.
of like a sell the rumor, buy the news,
Yeah,
right?
absolutely.
And when that usually happens, like the first thing that goes away or like the leveraged positions slash the hedges, right? So those push the book up, and then people start buying because, oh shit, price is going up. The worst is over, right? This market likes to climb
Yeah.
over a wall of worry, right? And so
Yeah.
reflexivity kicks in at that point. People keep buying and buying and buying. And guess what? More shorts get squeezed, and it's just like an endless cycle, right? And then all of a sudden, now they start looking for a new narrative, and they're like, oh, you know what? Maybe price is up because I
Yeah.
don't know X or Y, or maybe because they're going to approve the ETF later. So that's why the market is buying, right? They're always going to find a way to justify it, which is then going to give more and more funds reason to buy, right? Because
Yeah.
the nature of markets in general is that there's always cash sidelined, and
Yeah.
you
Yeah.
want to have an excuse. You want to have a reason to justify to your LPs why you entered a position or
Hmm.
even why you lost, right? So it makes people feel more comfortable to reallocate. All those guys that sold their spot or whatever, right? They're going to start buying higher, and that's what always fucking happens in this market. So it just
Yeah.
gave a very asymmetric bet, and you saw this
Mm.
with like the Israel Iran news. You
Yeah.
saw this with the Bitcoin
Same thing.
ETF. There's
Hmm.
countless examples. You know.
Yep. Yeah. 100%. Um, I think like price is a great advertising mechanism, right? Like once price moves up, the tech is
Yeah,
good again. Price moves
yeah,
down, we're
yeah,
at the
yeah.
bottom of the range, and people want are calling for lower. Like I
Yep,
was literally
exactly.
journaling the sentiment of some people on Twitter during this range because I had some time, and I was
Yeah,
like, wow, it's
it's
like
very it's
yeah,
yeah, yeah, it's extremely concerning right now. I like tweeted a bunch about, how I'm TPing above like 37,
yeah, people are getting
3,800,
pissed at you.
and
Why you
people
keep
are getting
doing it?
pissed. They're like, "Oh, you're gonna be left sidelined, enjoy
World's full of
fucking
shit, man.
coping, you bear," or whatever. I'm like,
Yeah,
"Okay, this is interesting." It seems like most of you guys bought the top, right?
yeah, they bought the yeah,
Um,
exactly, exactly.
and so
Yeah,
I do think that now this is the time probably to be cautious. Like,
yeah,
I'm not
absolutely. I
telling you to
agree.
go out and fucking short, right? We can still
Yeah,
go up. We can still have a pop after the announcement, but like a good way to maybe express caution would be closing a few of your longs. Pay yourself. We just had one of the fucking biggest moves, if not the biggest move, in the last 3 years for ETH, right?
yeah,
It's not unreasonable to sell some spot, close some longs, or even buy some like longer dated wingy puts, right? Those are still relatively cheap because the market is just pricing in an approval, and they're like, yeah, it's just going to go straight over 4,000 or 5,000, which I don't think is the case. Like, you're pretty likely at this point, I think, to see what happened with the Bitcoin ETF, where you bought the rumor in literally 1 to 2 days. And so you sell the
yeah,
news, right? A lot of these leverage positions that opened are not going to be holding for the tech. They're going to be fucking selling after the news has
yeah,
occurred, right? And then at that
absolutely.
point, when people can actually allocate to the ETFs within like a month or two,
Yeah,
then you're going to start seeing that same sort of accumulation that happened with Bitcoin. And obviously, in the medium to long term, I think it would be good for ETH. But don't be a retard. Don't buy the top. Be patient, right? Any dips that occur are probably good for buying, I think. But just be
yeah.
cautious and then pay yourself.
Yeah, absolutely. And that's like one thing I love about this space is, the reflexivity aspect and
Yeah.
like the money that comes in on situations like this where people start buying tops. And I mean, it's always the same. It's always the same.
Yeah,
People,
yeah. Within that one
uh,
day, we literally had like an increase in ETH market
bro,
cap
the open,
equivalent to the
yeah.
entire market cap of Solana. It's insane.
But the tech was extinct like the day before. Remember, like it was all going to zero.
Yeah, whenever I was like posting about, hey, good morning, ETH bulls, or I'm buying below 3K, everyone would be like, yeah, enjoy zero. Look
Yeah,
at this
exactly.
ETH BTC chart,
Same
cope you
shit every
bull. And it's
time.
just like,
Yeah.
how has that changed within 2 days, bro? Give me a fucking break.
Yeah, it's always the same. But yeah, I know people were interested in hearing your thought process behind this. So thanks for sharing that. I know you're not a macro
Absolutely.
person, so we'll keep it like to shorter term views. But what are your like shorter term views in terms of the market, like the next few weeks, and longer term? We'll say like the next few months, if you have any views as it pertains to that.
I honestly would not be surprised with a low volatility or ranging summer.
Mhm.
Um, we have exhausted like a lot of open interest in this market, right?
Yeah.
Both sides. And so people usually like to take breaks. Volatility usually compresses during these periods. And you saw a little hint of that in May. But
Mhm.
then now we're kind of back because everyone's like, oh, yeah, we're going to go back up again, right? But guess what happens, right? Now you're going to go to like 75K, 80K.
Yep.
People are once again going to be selling, right? There's still a lot of supply in this market,
Yeah.
whether it's all those leverage speculators from the ETF days or
Mhm.
people buying because of like a softer CPI print, right? So there's still a lot of supply, and you can see that reflected in the leverage in the market. It just keeps going up and up and up, right? And that's never a really good sign because in the face of any supply, that leverage unwinds and then it goes back in. So I think that you are probably going to see a range, something like 60 to 80K or 60 to
Yeah.
75K, right? And then similar for ETH perhaps. And then I think later in the summer, you're going to start seeing another rally in anticipation of the election. I think that's probably going to be your next narrative.
Yep.
Um, Especially for crypto, I think it's going to be very bullish because I personally expect Trump to do well, and I think that's going to be reflected in the polls. And if anyone has been following the administration, they've taken a pretty friendly stance on crypto, right? So
Yeah.
I think it's going to be good for your tokens, right? And people are going to probably be front running like a Trump win, um, in crypto. So I wouldn't be surprised if leading into the fall you see like another rally, right? So be ready for that. I don't think the bull market is over, but this is your slow accumulation ranging stage, which is pretty normal. Also, like there is a very, very small possibility that you get some sort of wipeout, right? As I mentioned before, there's still a lot of supply in this market. And it's very common in crypto bull markets to have like a 30-40% pullback, right? I don't know, that would put us like somewhere in like in the 40K or low 50K region, right? I don't know what would lead to that, but it is very possible. You should still be cautious that that could happen. And if personally I see any of those prices, I am going in with size. I still think they're bargains for the reasons I mentioned before, right? So don't be surprised if that happens. Be open minded, right?
Yeah.
Not
Yeah.
telling you
Absolutely.
again to fucking short, but like, you know, just be ready and don't expect this shit to go to 100K by like July or
Yeah,
June,
man. It's
right?
the
So
same thing. Yeah. It's
yeah,
the same thing.
yeah,
Whatever happened at the bottom of the range is about to happen at the top of the range, right? Like, I mean, I'm pretty sure
exactly,
we're gonna call
exactly.
for
You're gonna see a little
100K.
excess, right?
Yeah.
Exactly. Yep.
Yeah. I love to see. I love for you to see you tweet like, "Hey, Bitcoin can have a 30-40% pullback from here," and I'd love to see the reactions from people
Yeah, yeah.
to
People are
even
just over
consider
leveraged
that
in
as
this
a
market.
possibility. To even consider that as
Yeah,
a
yeah.
possibility. But yeah, like a couple of days ago, like I mean, 2 weeks ago, like everyone was calling for 40K or 50K.
Yeah, yeah, that was the norm, right? It was like, yeah, 52K. Why are you buying at 56, you retard? I'm like,
Yeah,
really?
exactly.
Like, does it make a difference?
It's pretty amusing. It's always the same. Um, all right.
Yeah,
The other thing,
people also, are very obsessed, I think, in this market of like catching bottoms and tops. And I think that's easier said than done. Like
it's very different. Yeah, it's
if you're
difficult. Yeah.
trading, yeah, if you're trading lower time frames, it makes more sense. For trading higher leverage, like there are a lot more bottoms and tops that occur. But if you're trying to like swing and nail the absolute bottom and top,
Yeah.
stop that. You're obsessing over something that doesn't matter and is going to cost you a lot of money in the long run, I think.
Yeah, absolutely. And so you've been in TradFi space. You kind of understand how that aspect of things work. There's this narrative of there's institutional flow coming in now, and how it's going to impact crypto trading, and the volatility is going to go down. Do you think the impact's going to be rapid or gradual? I mean, I believe there's already some changes that can be seen in terms of the flows, but I'd like to get your thoughts on that.
I think it's going to be gradual and slow. Like crypto is still a very young market, relatively speaking. Um, I mean, literally the only token that's pretty much traded is like Bitcoin and maybe a little bit of ETH, which some TradFi participants use as like a
Right.
proxy for alts. But there's a ton of participants that are still not active in this space that you see in TradFi, right? Still a lot of money to be allocated in this space, which isn't necessarily a good thing, right? If people see this as a risk asset, they could just literally be selling it all the time or something, right? So it's
Yeah.
not it's not always bullish, but I think I lean towards bullish, right? I think that you have a lot of funds, whether it's like retirement endowment funds that could just buy and sit and hold, right? You have a lot more macro funds that can enter and speculate. You have a lot more sophisticated participants, such as dealers and market makers. Like if the volatility space in crypto becomes more popular, those guys are going to be more significant flow, right? So it's going to be a very gradual and slow process, especially as a lot of people are awaiting and anticipating like regulation, right? One of the biggest markets is the US, right? And those guys are still, I think, struggling to trade crypto, right? If you are a US citizen, it's very hard to trade derivatives,
Yep.
swaps, and futures to this day, even options, right? So a lot of them have to go offshore, and that's not like an easy setup, or a lot of them have to go
Right.
DeFi, and that has its
Right.
own issues.
Yeah, absolutely. Absolutely. Yeah, I agree with you. I mean, yeah, people always like been this narrative, oh, like, there's a last cycle to make it, and all that crap. And I
Oh
don't believe
no,
that. Yeah.
no, never. As long as human greed exists, and it's going to become worse and worse. If anything, I think crypto will be a ripe space.
Yeah, 100%. All right. So let's pivot a little bit. I do this thing where I ask people on Twitter for questions. So I'm gonna go through some really quickly here. Yeah, you don't have to you can answer like really quickly. You don't have to go into details, or if you want to pass them. I mean, there's a lot of feet questions here, bro. Like, I don't know what's going on.
Size 6.5.
Brother, brother. What is up with all these feet questions? All right. All right. So let's
There's a
see.
high correlation between your trading performance and your inclination towards fee. That's all I'm going to say.
All right. So the first question, Ray Flynn asks, how long did it take to understand scaling positions?
Probably 1 to 2 years, I would say.
Okay. Mike Horton asks, what are the best techniques to identify absorption?
Um, I think there's a ton of different techniques. Me personally, I like to focus on microstructure, right? Look at stuff like footprints. Look at how open interest, reacts within like 1 minute time frames. Look at the different participants that are transacting again within the microstructure. Is it spot? Is it perps? How are they executing? Right. That's another important point. If let's say we are selling a lot, right? Price is going down, right? How is that being executed, right? If you're like looking, for example, at the 1 minute chart, you notice that every time price goes up and hits the 50 MA, it just goes back down, right? That's a pretty healthy TWAP, right? Whereas you might have other times where it's just like a 1 minute wick that's like 5 to 10%. That's just a liquidation, right? That's perhaps a better buying opportunity because those participants were not as sophisticated, right? So absorption, I think, really depends on a bunch of things. And me personally, I prefer to look at microstructure to determine that. And if you use stuff like exo charts, you can see it, I think, pretty clearly. So yeah, that's what I'd recommend.
Okay, awesome. Schizoflow asks, how did he make his first million?
Can't remember what trade it was, but I remember I took like a pretty big swing on a Bitcoin leveraged position. I think it was like I literally just put the entire portfolio. It was at like 200K, and yeah, it just worked out. I don't know. I don't really like to obsess over like wins or
Yeah,
losses in general.
right,
Like I don't
right.
really think like, oh, this is the trade that got me 2 million, or this is the one that got me 10 million. It is what it is, right? What I like to obsess over is the process and the system, and it's very similar to how I trade today, right? So focus on narratives, positioning, flow, right?
Yeah, absolutely. Absolutely. Sassy XBT asks, did you actually play golf with Trump, and how did it even happen?
Yeah, no, I play with him frequently. I mean, it's not a surprise to anyone that understands the relations between the
Yeah,
Trump admin and
of
Saudi
course.
Arabia, right?
Right.
So we have close connections, and
Right.
I know a bunch of members in his admin. I know him pretty well.
Awesome.
I also like, without doxing too much, I did work in public policy in Saudi Arabia, especially during the time of the Trump administration. So the
I
Abraham
see.
Accords and stuff like that. I was pretty active in the political scene here, but no
Yeah.
longer, of course. Like, yeah.
Right. Yeah. I mean, so that makes perfect sense. The Laird of War asks, okay, here we go. Pick one: trade like Simmons or chick with perfect feet. Can't have both.
Oh,
Chick with perfect.
I would say chick with perfect feet because the feet that you're given, you can't really change it, right? Those are your feet. Whereas you can kind of learn how to trade.
Beautiful. Anon.11 asks, does he have a feet folder?
Yeah, of course. On my phone, on my
How would you even
computer,
ask that? Of course he does.
in my mind. Like, what kind of question? Of course, bro. How do you think I wake up before every trading session?
um, all right, there's some other questions here. How does he see the Middle East? That's a very vague question. How does he see the Middle East in 5 years' time? What does that even mean?
It's a big region, man. I mean, the Middle East is defined by instability and growth at the same time. There's a lot of opportunity here. There's a lot of natural resources. Demographics are favorable in a lot of countries. So Saudi Arabia is like 70% of the population is below the age of 40, right? Which is pretty good for growth. We have a healthy economy, right? So I think there are certain areas in the Middle East, such as Saudi, the UAE, Qatar, that are going to benefit in the next few years. Their infrastructure is going to develop, their markets are going to grow. Whereas there are other countries, I think, that are pretty marred by instability. So you look at Yemen, look at Palestine,
mhm.
Syria. I think those only unfortunately continue to suffer. But I'm always hopeful. Their people are strong. They have natural resources. If the countries can just figure things out, if I don't know, the international sort of scene decides to intervene because they realize, hey, there's actually opportunities in these countries, right? Let's not just exploit them. Then I think it could be a win-win. But yeah, I don't know. I don't think there's a clear way to say this is where the Middle East is headed. It can be either or.
Yeah, it's pretty complicated. But yeah, it's like you said. I mean, as long as countries stop using them as grounds for proxy wars and all that other stuff, I think
Yeah.
hopefully things can get better. All right, I'll take one or two other questions here. Let's see. Okay, is he hiring an intern because I want to intern really bad.
Not at the moment, but perhaps after the summer or the fall. Um, and maybe I'll post on the Twitter, although we tend to do our recruiting in other manners, but
Right.
maybe we'll see.
Okay. All right. And last question here. I know you don't do like the macro stuff, but expectations for next bear market. I think there's like this theory going around that the next bear markets is going to be one of the worst, and we're in a huge bubble kind of thing, and so the next one's supposed to be like the mother of all bear markets. What's your kind of immediate thought process when you hear that?
Yeah, I mean that's what everyone assumes, right? Like we've had like a decade plus of good market conditions, and I don't think that's going anywhere soon. Like it's very easy. It's human nature to assume that mean reversion will happen. What most people don't understand is that all that liquidity that was added to markets and just to the general public over the last 10 plus years is not just going to dissipate, right? There's always going to be sidelined cash, right? You're always going to have buying, in my opinion. You're not really going to ever get to a point, unless it's like something really, really severe where markets just decides to sit on cash for a long time. And that's probably when you need to worry. But like, I think that you're just going to be like very range bound within the next 10 years, right? You're going to have periods like the last 2 years where you just significantly rally and then you see some taking profit, you see some narrative flips, and then we go back up and then we go back down, right? But like overall, I do think that it's going to be like an upward sort of curve, right? I don't think that that cash that you've been adding for years and years is just going to disappear, right? It's always going to be there, and there's always going to be an excuse to allocate it, in my opinion.
Yeah, exactly. All right, that pretty much wraps up the audience questions. And then before we wrap this up, I typically like to ask people like what a typical day looks like for them and what the current routine is. So how does that look like for you currently? How do you manage your time? Because you have a lot of hats that you wear. How does that look like for you?
I am lucky to say that I don't really have a typical day, right? I
Mhm.
try to stay away from a routine life as much as I can. Even like trading, fortunately, doesn't really allow for a routine life, right?
Right.
Nowadays, I try to minimize like how much time I spend in front of the screens. Like on
Mhm.
average, it's like maybe 6 to 8 hours, right, instead of 20 hours a day. And there are a few key elements that are kind of like deal breakers for me that I have to do every day. I have to
Yeah.
keep myself accountable. I have to
Mhm.
get some activity in, right? Whether it's in the form of running, hiking, soccer. Um, and then also some mental activity, right? I do a lot of crosswords. I
Mhm.
do a lot of sports analytics. I love building like econometric models for baseball and basketball. I love going out and stargazing every now and then. I love reading and writing literature or philosophy. So, just try to use all the different parts of your brain, right? Don't just silo yourself to one area. Like, I know that in the first few years, maybe even first couple years of trading,
Yeah.
it's easy to just get absorbed and do one thing, but, like, you gotta keep yourself grounded, and, that's for the best, not just for your mental health, but also for, perhaps not getting too biased or not getting too obsessed, right? Like, imagine you're looking at a chart literally 20 hours a day, you're bound to fall in love with a position, even if it's in the wrong, right?
Yeah.
And maybe the last thing I would add, to my sort of daily regimen is I try to talk to as many people as possible.
Mhm.
It's whether they're traders, whether they're people with other interests. I think that's the best way to learn, right? People have a wealth of information. Don't be afraid to reach out. Don't be afraid to go out, right? I am autistic, right? I don't have like an easy time socializing, but like just put yourself out there, get out of your comfort
Yeah.
zone, and it gets easier and easier, right? Also like hanging out with women, that helps.
Yeah.
So don't do it too much.
A
Don't
lot of
overdo
CTs
it.
don't know how to do that, man. Yeah. A lot of CT does not know how to do that, I think. Um, yeah. Um, what was I gonna say? I completely lost my train of thought.
See, now you're thinking of women. God
Yeah, I
dang,
was
bro.
thinking.
You got lost in the sauce.
You know what I was gonna say, actually, House. You know what I was gonna say. Like I've
Mm,
studied successful people in every field, and I feel like there's
yeah.
always a period of time where they're fucking obsessed. Like their life
Oh,
revolves
yeah.
around their obsession, right? So,
Yeah.
I feel like in the beginning, yeah, like it is unhealthy, right? There's always a trade-off. Like if you want to be
Yeah.
really fucking good at something, you're going to be obsessed when it comes to that.
100%.
Um,
100%.
like, there's traders I talk to that sit in front of the screen. Like I did the same. Like a lot of like
Yeah.
forgetting
Oh,
like,
yeah.
everything. Everything goes out the window.
Mhm.
But I think
Mhm.
like after a certain period of time, you need to be able to balance it out. Like it's just not
Yeah,
sustainable.
diminishing
Right? You
marginal
just fall
returns.
apart.
Yep.
Yeah, exactly.
Yep. Yep. Yep.
Exactly. All right. So let's wrap it up. And if there's any advice that you'd like to give anyone who's listening in who wants some blunt wisdom um, in general, like life and trading.
Okay. I guess we can start with the trading bits. Always adapt and do it quickly, right? Being quick is always an advantage in this market, whether it's how you think, how you adapt, how you trade. Be comfortable with being uncomfortable, right? Like seek information that could make you uncomfortable. Don't be afraid to challenge convention or market wisdom, um, whether in one trade or an entire strategy. But also like react, right? React with reason and not out of fear, right? It's important to also listen to your subconscious at times. Like I'm not telling you to always be uncomfortable, right? Sometimes your body tells you, hey, you probably should not be in this spot, right? So listen to it. But also again, like a lot of my best trades were usually during times where I was uncomfortable, where I was like, damn, should I really be doing this?
Hmm.
Right. But that also may be because of my trading style. I'm a counter trend trader most of the time. I like to buy lows and sell highs, right? Which is by definition counter trend. And that takes time to develop, I would say. In terms of life, uh, stay close to the people that matter, right? Um, there are a lot of sycophants in this world. There are a lot of charlatans, right? At the end of the day, humans are greedy. They are self-serving creatures, right? Um, so be close with your family. Be close with the really, really good friends, right? You don't have to fucking be the most popular person on earth, but have like 3 to 5 people in your life that matter,
Yeah.
right? And don't do these people wrong, because once they're gone, you're gonna realize their value. So stick to the people that matter, right? Stay grounded and just enjoy life, right? Like, money is not everything. I promise you, you're gonna reach a point, hopefully, where you have enough money that you don't have to worry about some of the necessities, whether it's housing, healthcare, education, right? That is the value of money. But beyond that, everything else is kind of luxury, right? Like,
Yeah.
all these fucking supercars, watches, models, that shit doesn't matter, right?
Right.
What actually matters is enjoying life, right? Go out, travel, learn, communicate with people, socialize, learn new hobbies, right? It is life is a gift, and treat it as such, right? Don't treat it as a given. Go out and fucking enjoy it. Live your goddamn life. You only have one life to live. Why would you want to spend it just in front of a screen for decades, right?
Yeah, absolutely. I love that advice because yeah, people see it as a cliche, but I've met people I know personally. I know I have friends who have a lot of money, but they're
Yeah.
miserable. They're miserable. So,
Yeah. Yeah.
yeah,
Yeah.
that's great advice. I appreciate that you shared that. Are there any Twitter account recommendations or any accounts that you nominate for an episode of Perpetual Perspectives? You can give me the list later. You don't, if you don't remember off the top, but I usually
I would
ask people.
say probably The Giver. I think his
The
handles
giver.
like
Okay.
Lazy Villager 1. Yeah, great guy. One of the most articulate people in this space, in my opinion. Would really like to see him on. Um, and maybe like Chiefing Za. He's a great trader as well.
Chief Exile. Yeah. Okay.
Um, yeah, good friend, good trader. Let me think. I'll probably think of like a few other names, but for now, I'd probably want to hear those two.
Okay. Awesome. Awesome. We'll reach out to them, and usually like to end these with like a thoughtful quote or thought provoking idea. And this
Oh,
one I
maybe
like. Yeah. Go ahead.
Anteater. Anteater. Anteater is
Anteater.
a
I know Anteater. Yeah.
yeah.
Okay. Okay.
He's
Yeah. I'll try to
yeah,
get him on.
yeah,
I'll try to get him on.
yeah.
Yeah, I don't
And
know how he does
I
the
don't know.
pair trading, bro. Like 50, 100.
Oh
Like, I
yeah,
don't
no,
know how
he's
he manages
he's
that.
he's
That's
nuts.
insane.
He's absolutely
He's
nuts.
actually
And
autistic.
then
Like I'm autistic, but he's actually.
hey, that's an edge, bro. It's a fucking edge in this
Yeah,
market.
it
I
is. It
promise
is.
you.
I know, bro. I know. Anyone else besides him? I think you were about to say something else. I might have cut you off.
Yeah. So Smartest Money could be a great addition as well. I think he's one of the
Oh
best
yeah. Yeah.
performers this cycle, especially with alts and rotations. I don't know how much time the guy has. So
He's
I don't
pretty
know if you'd be
private. I
willing.
I did try it. Like
Yeah.
he's if
Yeah.
we
Yeah.
talk,
Yeah.
we
Yeah.
talk. So like some people don't even want to dox their voice, so it's hard to get somebody
Yeah.
on. So I don't think
Yeah, yeah,
we'd
no,
be
it's
able to.
understandable.
Yeah.
It's
Yeah.
understandable. Maybe
Absolutely.
a couple more 52K skew. I think
Oh, he's a good
he's a
friend
good
of mine.
one.
Yeah, I've had him on. We
Yeah.
spoke for like 3 hours on here. Yeah, he's a good
Oh,
friend
no
of mine.
shit. Yeah.
Yeah.
Maybe another good friend, the Crypto Nexus. He's really great when it comes to like narrative and news trades.
Crypto Nexus. Okay.
Very short term nature, but like one of the best scalpers I know in the market as well. He could be good. Let me think. Zahir, Split Capital, great mention.
Here.
Marty, like the options guy, he's
Oh
good.
yeah. Okay.
You could do V Horny as well. He's a lot of interesting takes. Very entertaining guy. Good trader as well. He memes a lot, but he's actually a solid trader, I think.
Okay.
I would recommend Trizzy. Trizzy's good from like a
Crazy.
psychological perspective.
Okay.
Yeah. A lot of good takes with regards to like range trading, psychology, and maybe while we're on the topic of like positioning and because you had like a bunch of questions about absorption and all that. There's a good guy, Magus or
Oh
Magus. I don't know
yeah.
how to
He's a good
pronounce
friend of
it.
mine as well.
Yeah,
Yeah. Yeah. I'm trying
yeah.
to get him
He
on.
uh,
Um.
he has a lot of knowledge in that area, I think.
Yeah, I've been trying to get him on, but people are so busy. Yeah, he's a good friend of mine as well.
No,
I'm
of
looking to get
course.
him on. That would be great.
No, I think he thought he's also pretty good. I know he does like a bunch of spaces, so I don't think he would mind like voice doxing or any of
Yeah.
that. And it's probably good for like advertising his fund and stuff. So maybe
Okay.
he would be interested as well.
Yeah. Yeah. I'll ask him. Is that it?
Yeah, I think that should be it.
Awesome, man. So I really appreciate you taking time to have this conversation with me. I know you're a busy man. I've been pretty busy myself, but I'm
Absolutely.
glad we got to make this time. And yeah, even aside from the pod, like I've been wanting to have a conversation with you. it's cool to like talk to people in the space. It's fairly closed off for a while, but this last year, so I got
Mm.
pretty active, and it's been nice. Yeah, there's like
Yeah,
genuine people, and there's everyone that I've spoken to. Like most people are not dickheads. You know what I mean? Like
yeah,
they're
yeah,
good people. Like I haven't encountered
absolutely.
anyone. Like I mean, people who comment and stuff. Yeah, that's a different story. But like traders who've been in the space for a while, typically they're not
Yep.
absolute douchebags.
Yeah, if
Um,
exactly. I think in general, like you can very easily tell the difference between like a scammer and a grifter, right? And trading, in my opinion, at least, is not one of those areas that attracts scammers. Of course, there are like methods in which like I don't know someone can show like a paid group or like ref links or whatever, but those are
yeah,
obvious, right?
yeah,
If someone is a trader, has been active in the space for a long time, right? Like is comfortable being wrong, um, teaches people, like is active on Twitter, that usually is a good person in my eyes, right? And I think thankfully like trading is one of those areas in crypto where it's not rife with scammers. Whereas like if you're talking about VCs, if you're talking about fucking projects, if you're talking about I don't know, a lot of different sort of areas within crypto, you're more likely to see scammers, right? But trading is one of those areas where it's like if you're good, you survive. If you're not, you get the fuck out, you know? And it's very easy to tell.
yeah. Absolutely, absolutely. All right, just to wrap it up. Before I stop the recording, I mean, obviously, I think we're gonna have to cut off. The editor is gonna have a fun time editing this episode.
Yeah.
But I
Yeah.
usually like to end it with like a quote or thought provoking idea, and one that really resonates with me is by Dostoevsky, which is the cleverest of all, in
Yeah.
my opinion, is the man who calls himself a fool at least once a month. So I think we can all learn from being humble and being transparent when it comes to ourselves. And so to everyone listening in, I hope you enjoyed this conversation and where we'll take away some actionable items or
Let
things
me
that you can consider improve upon. Yeah, go ahead.
let me add, since you mentioned Dostoevsky, my favorite quote by him, and it goes back to what we were saying earlier. How could you live and have no story to tell, right? So
Yeah, that's a good one,
focus
man.
on writing
Love it.
that. Yeah.
Love it.
Yeah.
Love it. All right. Until next time. Thanks for listening in. Hope you enjoyed the episode.
Thank you. Thank you for having me. Thanks, guys.